based on this chart and using Fibonacci targets, it's actually pointing to quite a high target. It's actually pointing to $40, $40.50 to the upside. So 38.50 is kind of the next, or 38 is the kind of kind of pause area, and then it could go all the way up to 40. So percentage wise, silver is definitely a good bang for your buck. It's got about a 10% upside move if we do have a pop and break right here. And I like the metal space better than the miners itself.
Canadian technical analyst Chris Vermeulen, founder of the Technical Traders, believes that precious metals are poised for a significant upward movement in the coming weeks. According to Vermeulen's analysis, gold could potentially break out and move higher over the next 3 to 4 weeks. However, he cautions that markets often unfold more slowly than initially expected. Gold's current consolidation pattern has caught Vermeulen's attention, as it closely mirrors previous formations that typically last around 3 to 4 months. This technical setup comes at a time when gold prices have already surged in 2025, with President Trump's focus on tariffs pushing the metal to fresh highs. The longer-term outlook for 2025 and 2026 remains decidedly bullish for the precious metal. The fundamental backdrop supporting gold's advance includes the metal holding above key technical levels while benefiting from a weaker dollar and lower yields. Gold's traditional safe haven demand remains underpinned by ongoing fiscal and trade uncertainties. From a technical perspective, if bulls can decisively clear the $33.47.97 pivot, momentum could extend toward the next resistance level near $33.70, potentially attracting further buying interest. Silver presents an even more compelling opportunity, according to Vermeulen's analysis. He projects that silver could rise to $38 and possibly $40.50 based on Fibonacci targets, offering approximately 10% upside potential. Notably, Vermeulen expresses a preference for silver over mining stocks due to what he sees as stronger technical indicators in the white metal. Silver mining stocks often lead physical silver, serving as reliable indicators with an 80 to 85% success rate, according to the Daily Gold. The current positive divergence, where mining stocks outperform silver, along with strong market breadth, suggests a bullish move in silver may be approaching. Before we dive in, don't forget to like, share, and subscribe to our channel to help us reach 1,000 subscribers as soon as possible. Only 2.3% have subscribed so far, so hit that button and tap the bell icon to stay updated with all our latest insights.
Yeah, there's actually an interesting chart pattern here for, gold is definitely still in a very strong chart pattern. We hit a major target over here that had a consolidation. We actually hit another one over here using Fibonacci levels, and we hit another one over here. So gold is performing exceptionally well. It has a series of rallies and pauses known as bull flags. And I think we're going to see happen again. So like right now, we're kind of like, gold is kind of in this scenario right here. Whoops. Let me just zoom out a bit. I know this is probably hard on your viewers' eyes, but gold is in this scenario, I think very similar to here. And as the stock market starts to sell off for several months and starts to sell down, I think we could see, gold continue to push higher. Eventually, as you just said, Danny, this is exactly what we see when real fear in a bear market actually starts, and we start to get a massive, massive breakdown. In the stock market, actually started over here. When it starts to sell off, gold will get pulled down with it. But gold only pulled back about 34%, whereas the stock market pulled back 55, 54%. So gold is definitely lower volatility, doesn't carry as much risk. And then eventually gold will shoot up and take off. And I think that's going to be the next major bull market for gold miners. And I'll be really excited. But right now, we just need to let the stock market see if it's going to put in a top, let it correct, and take advantage of the correction. And at this point, gold, you should be long gold. If you hold it physically, you should be happy. It's a good chart pattern. I do think we're going to go to about $37.50 an ounce. And then from there, we'll see where the market. I would think over the next month, I'd say the next 3-4 weeks, we could see gold break out and push higher. The market always has a way to drag things out longer than you anticipate. But as you mentioned before, these consolidations are all roughly the same, 3-4 months. Here we are 1, 2, 3 months. So another month or so, it could break out and be running higher. And that goes in line with kind of the monthly chart that we see the stock market poke on a monthly chart to a new all-time high. And then by the end of the month, or the following month, we have a big red bar with the stock market selling back down and reversing. And so that coincides, I'd say 1 to 2 months, gold could have this push up and rally to the upside, and the stock market might put in this fake out. It's like the big question is the stock market having a breakout or a fake out? And we're not really going to know probably until a monthly close or 2 months from now. You need to see how the monthly bar closes and how the following one closes. So we have to just stick with the trend. Silver is similar to gold miners. It's actually really caught up to gold and outperformed. It has a bullish chart pattern. Silver, again, is a commodity, so it won't have the same draw as the stock market goes down. So we got a bull flag pattern. We've got another rally bull flag pattern. It's holding up. So I do like silver and gold. I like both of them. It is pointing to about $38 plus per ounce to the upside, maybe even higher than that. And so silver, I like the commodity space better than the miners themselves. Based on this chart and using Fibonacci targets, it's actually pointing to quite a high target. It's actually pointing to $40.50 to the upside. So 38.50 is kind of the next, or 38 is the next kind of pause area, and then it could go all the way up to 40. So percentage wise, silver is definitely a good bang for your buck. It's got about a 10% upside move if we do have a pop and break right here. And I like the metal space better than the miners itself.
Chris Vermeulen identifies striking similarities between current market conditions and the 2007 pre-crisis environment, where the S&P 500 reached new highs while gold also trended upward simultaneously. This dual momentum pattern has historically preceded sharp market corrections, creating conditions for gold rallies as investor fear drives capital flows towards safe haven assets. The S&P to gold ratio is a key gauge of investor sentiment. When long-term support breaks, it signals a shift from equities to gold, as seen in 1972 and 2001, both of which were followed by major gold bull markets. Over the past 25 years, gold has consistently outperformed the S&P 500, especially during periods of market stress, highlighting its safe haven strength. Vermeulen favors physical gold over mining stocks due to their different risk profiles during market corrections. While mining stocks currently outperform and provide leveraged gold exposure, they remain equity investments vulnerable to broader market declines. Their correlation with general stock market sentiment means they can fall alongside other equities during corrections, precisely when investors need protection most. Recent gold price surges reflect a convergence of factors, including Middle East conflicts, Trump administration tariffs, and global economic uncertainty stemming from trade tensions and fiscal policy changes. These geopolitical tensions continue to boost safe haven demand, creating sustained buying pressure that positions gold for potentially significant gains if historical patterns repeat and market corrections materialize, as Vermeulen anticipates. Let's get back to the interview.
I love these. This is signature bullish pattern. It is pointing to higher gold pricing. And actually, there's a really interesting comparison chart here of the S&P 500 and gold. And actually, if we go back to the 2007, 2008 market top, this is what's really kind of interesting here is, let's just zoom in on this price action. Now, if we were to take a look, so this is the 2000 and I'll just zoom out a bit. This 2007 major market top before we went into a huge crash. Mm-hmm. And so where we could be right now is if we were to look, this is the weekly chart, the candlesticks is the S&P 500, the yellow gold line is the price of gold. Mm-hmm. If we kind of look at where we are right now on the right, which is today, and this is 2008 on the left, we see gold moving up, and we saw the stock market hit this nominal new high. And right after that, gold continued to sell up as the stock market actually got rejected. And eventually the stock market sold off and went into a 55% correction. And so I think we're in something very similar right now, whereas we've come up, we're hitting this nominal new high. We need to see how this weekly chart or the next couple bars play out. But we could very easily see the stock index push up and then eventually start a big sell-off. And as that fear hits the market, gold should have that next push higher. So we're in a very similar scenario as kind of this nominal new high and gold shooting up in that market scenario. So that's something I'm keeping my eyes on because the sentiment is very similar to what we had in 2007. It's always a different situation, but the charts and the sentiment and the momentum come to life. They've been actually outperforming, which is a good sign. If gold miners outperform gold, it usually means gold's going to rally and break out. So we have been seeing gold miners. It's not a very smooth ride, but it has been trending higher. It's been consolidating. It's pointing to another push and run. My only fear with miners, and we saw this in 2007, 2008, is yes, miners should do well, but what happened before was the best opportunity was actually in gold. Boring pet rock gold, because when the stock market starts to sell off and roll over, gold miners are a stock and they're stuck in the stock market. And the stock market is like the ocean tide. When the tide goes down, all boats go down. Well, when the stock market tide is going down, even though gold might be going higher and the bullish case for miners is really good, they're stuck in a tide that is constantly pulling. So we actually saw in 2007, 2008, there was a small window where gold rallied like 5 or 8%, and miners actually ended up not gaining anything. And so just because they're more volatile doesn't mean actually they're going to be a better play. They are holding up better right now, but I still like gold. It has the best chart pattern. It's the most consistent. And to me, it has the highest probability of making money. So I wouldn't jump ship to miners, although that's what everybody seems to have done. But big old boring gold is kind of like, just want to make some easy money with low volatility. Gold is the play. And I'd be happy with gains, not trying to like swing for the fences in this type of market environment. But overall, typically we see the stock market crash and sell off. Like a bear market, the dollar becomes a favored play and the dollar rallies. So we got the stock market showing signs that it's poking to new all-time highs. People are overly bullish. I believe the top is still coming in stocks. The dollar is the most hated. It's at major support. It's looking ready to bounce. Gold is warning us that the whole world is nervous. They keep moving into gold because they don't know what else to do. And gold's been a top performer. So there's a lot of these signs that are slowly painting this picture, but it is painful. Everything has to get stretched to the maxes. Everybody needs to get long stocks again. Everybody needs to bail on the dollar, and people who are going to move into gold, buy gold. And then we're going to see this huge reversion and everything changes direction. But the market has to stretch people to mental breaking points to put those positions on. And I believe we're getting there. I think the dollar is actually going to find a bottom here sooner than later, which goes against everyone else's opinion, which I'm a contrarian trader. I look for these extreme sentiment shifts. When everybody's hating, you should be starting to like something.
Could we see both the dollar and gold get a bid at the same time?
I think we could. I think we could see it. We've seen that quite a bit, really, over the past year and a half. I think they could both move higher. The stock market could start selling down. People get really nervous and they move to gold. We saw that in 2007. Gold took off.
Gold and silver continue to reflect growing market uncertainty, with both metals positioned for potential upside as key technical signals align. The strength in gold, supported by historical patterns and consistent outperformance, reinforces its role as a reliable store of value. Silver, with its more substantial percentage move potential and leading signals from mining stocks, adds momentum to the bullish outlook. Together, they signal a shift towards safety and long-term wealth preservation amid mounting pressure in broader financial markets. Do you think gold and silver will lead the next significant market move? Let us know in the comments, and don't forget to like the video, share it with your friends, and subscribe to help us reach 1,000 subscribers. Only 2.3% have subscribed so far. Hit that button to stay updated with the latest insights.